Incredibly important aspect of for this community as we think about GSE reform in particular, and I really welcome so much your willingness to get input from the affordable housing advocacy community. Next, we've got an hello. Hello, Bill. We've got, come on up, guys. No, come on up. No, come on up. We've got a great panel. We've got 3 experts from the Terwilliger Advisory Board, and they are Nick Retsinas, former FHA Commissioner, and Freddie Mac Director, and former head of the Joint Center, and still, I think, Chairman Emeritus. Is that right, Nick? Actually, I'm not supposed to do the introduction. I'm sorry. Jim Parrott, Jeb Mason, and Bill Killmer from the Mortgage Bankers Association. Thanks so much, and take it away.
Nick.
Nick.
Thank you, Rick. Good afternoon, everyone. Ron, let me join the chorus and say thank you. Thank you for your leadership. Thank you for your vision. It's very helpful and very illuminating to all of us. We have a great session this afternoon. No microphone. Mike. Thank you, Donald.
I can hear you fine.
Okay?
You're disconnected. There we go.
That's a good start. Okay, is this better?
Yeah.
Hello again. We have a great session. We're going to ask these 3 gentlemen to look into their crystal balls and tell us what the future of housing finance is in the United States. In addition to that, we'll talk about housing finance reform legislation, where it is, what the prognosis are, what the odds are. Information good enough to bet on.
Ooh, don't say that. He's kidding.
Not really.
There's a casino close by.
There is a casino. We have the same odds as the casino overall. Let's talk a little bit about what the issue is. The issue is, in the United States, given the size of our mortgage market and the mobility of American households, we need capital from around the world to help finance those mortgages. We need bridges to the global capital markets. For 40 years, Fannie Mae and Freddie Mac were that bridge, joined by Ginnie Mae. On September 6, 2008, the earth stood still. Fannie Mae and Freddie Mac were placed in conservatorship. I happened to be in the room when that happened. Happened to be in a room with Henry Paulson when that happened. And I said, how long will they be in conservatorship? Oh, the next administration will take care of it. Well, that's administration ago, and we still haven't taken care of it, kind of overall. We want to talk a little bit today about why that is and whether or not we're close to some kind of consensus. So Jim, let me start with you. You have been a spectator, a participant, an observer of housing finance reform for these last many years. What do you think the odds are that we can come to some kind of consensus? What do we agree on, and what do we yet not agree on?
The odds. I didn't know you were going to ask me about the odds. Let me back into that. So, consensus, I think, at a very high level, there's a consensus. It's not uniform agreement, but there's a rough consensus that that central to reform needs to be weaning us off of our complete dependence on a too-big-to-fail duopoly at the center of the system. Heading into the crisis, Fannie and Freddie managed the entirety of the securitization infrastructure for this channel of the market. They took and managed almost all the credit risk, with the exception of the MIs, in this channel of the market. And as a result, we couldn't let them go down. They knew it, investors knew it, policymakers knew it. And it created pretty distorting incentives for them to take excessive risk, knowing that at the end of the day, they could place larger bets that if they didn't pay off or didn't work out, they wouldn't have to pay them off. The taxpayer would, which is how it turned out. The conservator, regulator, FHFA, has done a fair amount in the intervening years to put us in position to begin to wean ourselves off of our reliance on them in building out a securitization platform that ultimately can handle the securitization infrastructure instead of Fannie and Freddie, and requiring them to push out a bunch of credit risk in the market. But I think the consensus now is that that's all well and good, but it's not far enough. We're still relying on them playing an overly critical function, such that if they went down, if they were to be spun out of conservatorship tomorrow and they teetered, would yank them right back in again, which means we haven't solved for the incentive problem. There are a lot of different proposals out there for how to do this in a way that is maintains broad access to credit, maintains broad access to the secondary market for small lenders. But at its core, all the proposals that are at least being taken seriously on the Hill have that common set of objectives in mind. Probabilities We can come back to this maybe at the end after the political part of it, but my sense is we've got a 50% chance that you'll have a much more robust legislative debate in both chambers next year than anybody is expecting. I think we'll have out of the House and the Senate bills next year that will focus the collective mind on this issue like we haven't had, frankly, since the crisis.
So are there particular issues that separate the proponents and opponents of housing finance reform and what the future might look like?
So, I'll jump in on that if that's
Sure.
all right. So I separate the world of constituencies who are sort of making noise on the issue really into what I've come to call the 3 R's. The retire them crowd, the restore them crowd, and the reform them crowd. And I think the retire them crowd really used to be represented by Jeb Hengeling, and the PATH Act basically said, let's, and real conservatives that wanted to just wind down Fannie and Freddie as a means of reducing taxpayer risk. The restore them crowd, I think, is principally represented by hedge funds who own the shares, and some of the people that helped promote Fannie and Freddie getting to the shape they were in prior to the housing crisis in the first place. But increasingly, I think, to Jim's point, there's a lot of growing consensus, right, left, and center, that the status quo is not acceptable, and therefore they're in the reform crowd. And why should this room care? I think it's because the systemic risk issue still hasn't been solved, which Jim pointed out. I think it's also true that the policy certainty and instability that's caused by this unresolved conservatorship is trapping capital on the sidelines that could be going to support the growth of the housing market. As others have highlighted, our housing activity, I think, has lagged what we should have in a normal recovery. And I for one, think part of that story is the uncertainty around Fannie and Freddie's future. And it continues to be a risk to taxpayers, to consumers, and others, unless and until you've addressed, I think, what Jim pointed out, which is taking the credit guarantee risk-taking function away from the critical infrastructure function, such that you have guarantors that can fail credibly without threatening to take down the entire system.
Another way of asking the question would be, are private investors addicted to the government guarantee? Is that part of the problem?
No, it's a different, this gets pretty wonky, so let me try not to go down the rabbit hole too far. But one of the reasons why the housing finance system we have is as liquid as it has been for a long time, which affords the country a level of access to long-term lending like the 30-year fixed rate mortgage, is that we attract a remarkable amount of investment from interest rate investors, right. Sovereign funds and the like, mutual fund managers and the like, that frankly are not interested in taking credit risk. And for them, that means that the sovereign has to stand behind the credit risk on the MBS that they invest in as interest rate investors. And if you want to pull the government out from behind that system and introduce that amount of credit risk back into the system so that some private party is going to take it instead of the government, which introduces a level of counterparty risk, they may go down, then you'll have a lot of investors in today's system that will frankly opt out. They'll go invest in treasuries or invest in other stuff. And it's not the end of the world. It just means that the access to long-term fixed rate lending will contract considerably. It'll be a much smaller universe of folks that get access to long-term fixed rate lending. And again, that's not the end of the world, but if we as a society have decided as a matter of public policy that we want to make available to those that can sustain these loans long-term fixed rate lending, as opposed to having adjustable rate arms where the biggest asset you have in your family is subject to the volatility of the day's interest rate movements, then you need the government to stand behind the risk.
Bill, your organization has put together a lot of papers on what this might look like. Is there unanimity among the MBA leaders?
Oh, absolutely, there is, and I think that's kind of it is shock and surprise, given the big umbrella of our membership. But on multifamily and single family, the Blue Ribbon Task Force that we created for one of these proposals that Jim referred to that is getting some traction on the Hill and I agree with these guys that there's more unanimity amongst the major proposals. You know, there's more that we all agree on than the items that are the points of disagreement, the 3 R's that Jeb mentioned. But yeah, I think the key points and the touchstones of that conversation in fashioning our white paper and our proposal was to make sure that it was durable enough that, you know, all the different industry niches and segments would feel comfortable with it. I mean, and again, the common themes, you know, putting more stacks of private capital in a first loss position, you know, having that catastrophic backstop in place, creating competition through, you know, the ability to have multiple guarantors. And I agree with these guys in terms of their handicapping about the increased probability of action on the Hill. There's what I call kind of creeping pragmatism, particularly on the House side, that's snuck into this debate. And you know, it may be the difference between attempting a 60-yard field goal and a 50-yard field goal, but those odds are increasing. And as Jim was saying, the administrative reforms at FHFA have made it easier for the Congress.
There still are political wins around that field goal attempt.
Absolutely, yes. and there always would be.
Chip, talk a little bit. I look back over the last couple of years. I see Johnson Crapo, Johnson gone, Corker Warner, Corker about to leave, Henson leaving. Is that telling us something? Is this too risky to talk about?
Dave Stevens is retiring.
Dave Stevens is retiring, yeah.
It's a number of critical players who've been at this for a long time. And look, I mean, my hope, I'm going to choose to be an optimist and say that my hope is that this gives further impetus to doing it this Congress. I think there are some factors that help make this easier. Certainly we want to be doing this before we face another housing downturn. It's going to be much harder in those circumstances. I think you've got some catalysts for potential change, and of course there's this dividend sweep issue, which I don't want to go down that rabbit hole right now, but that's coming up for decision. And the fact that the Fannie and Freddie's capital is set to go to 0 early next year. Mel Watt's term runs out at the end of 2018. Right. That has, I think, non-trivial risks for a lot of people in the housing sort of complex, broadly speaking. I think it could serve as a major motivator for why progressives in particular want to start to engage this process, because they're not going to like the successor absent a legislative reform effort.
Let me put a fine point on that, because that's extremely important. So I think there's several things coming together that make next year a higher probability year for action than we've had in a while, and probably means that probability of action beyond that drops pretty significantly. I think I'm relatively confident that Senator Corker is and will continue to make this a pretty high domestic side priority for him in the next year. I'm pretty sure that we'll do the same thing for Chairman Hensling, and we'll push him a little bit to the center, not principally. He's still of the same view about this space that he has been before, but I think he, in the interest of getting something done in his last year as chairman, is likely to be more of a negotiating frame of mind. And I think a lot of folks who have been reticent about reform because out of comfort with the status quo, viewing reform as I'd rather have the devil I know than what you crazy legislative folks are going to give me, especially for those who find the current legislating environment unnerving. I think for a lot of those folks, a lot of those stakeholders, as they begin to internalize the reality that Mel Watt will not be here beyond January of not this coming year, but the year after that, and we begin to speak about actual names of people that would replace him, and we begin to talk about the things that an FHFA director can do, including really undermine the duty to serve, really undermine goals, turn off the access and affordability fee. A lot of the things, crank down loan limits, they can do unilaterally. So there are a lot of the very things that give a lot of folks that are, in my mind, overconfident, overcomfortable with the status quo. Most of those things are highly contingent upon what the FHFA director wants. And when we begin to talk in detail about who these sorts of folks are going to be,
a lot of them are good friends of Jeb's and mine.
Yeah, right. They're at this party, not mine. But it's an inherently destabilizing prospect for a lot of those who are holding on to the comfort of stability. And I think that's going to change the negotiating dynamic if the House and the Senate can come to something that's pragmatic enough that those who like the status quo can get comfortable with in the face of the prospect of a highly destabilizing drift rightward in 2019.
The only issue I take with that is I'm a little nervous about someone saying the motivation for successful legislation on this very complex issue is it could be worse.
No, it's the flip of that.
Yeah.
I would say the flip of that. You've got some key stakeholders that for a long time have been very reticent to engage aggressively in negotiating to an answer they're comfortable with. And the reason for that has been what we've got now is okay. I'm okay with it, and I don't want to negotiate with all you crazy people anyway. I'd rather hold with what I've got than deal with you folks. As it becomes clear that what they're holding on to is not going to be around that much longer, it'll make them much more inclined to be willing to be negotiating partners in all of this than they were a year ago.
And for politicians, I mean, do you want to be part of a process that's going to increase the cost of mortgage credit? I mean, they look at it in a very binary way. That's one of the reasons I think really for the, you can get into other reasons why the Johnson-Crapo effort failed, but that was primarily, this is complex. We're not sure that we're willing to take that risk in terms of that being an outcome that we're party to. I agree. It's not just it could be worse. It's again what I referred to a minute ago is this creeping pragmatism that to help Chairman Crapo out in the Senate, Chairman Hinchling really is trying to move closer to the reform, maintaining his convictions, but move closer to the reform side of the debate than the retire side of the debate.
And the thing I'd say, Nick, is just that look, the starting place for any domestic reform is versus the status quo, right? In this case, the status quo is not an option anymore. I think it was an option for a long time in recent years, but that status quo is slowly going to collapse in the near future. Not only the changing of the guard at Watt, the capital issues at the enterprises, but also this housing recovery is getting somewhat long in the tooth, and I don't think we've completely suspended the business cycle forever. So I think the urgency is increasing from a policy standpoint to address this in a meaningful way sooner rather than later. I don't think any administration sitting in Treasury shoes, sitting in FHFA shoes, that you can afford to be flat-footed anymore about the issue. There's a very real fear factor about an X date in the future that I think is still quite far off, but could quickly sneak up on us, in which there's a major disruption in the secondary markets, and that leads to real capital flight from the housing market and creates some very unpleasant conditions, to say the least. And so I think any responsible policymaker looking at that set of fact set is going to feel like they need to at least invest a meaningful amount of political capital in trying to get something done.
They may be responsible policymakers, but they're also politicians. And I wonder sometimes, after the crisis, the Republican Party very much demonized Fannie Mae and Freddie Mac and did a fabulous job. I remember getting a call one night from a Democratic senator who will go unnamed, who was in conference about the bill and what to do, who was always a supporter of the GSEs, said, tell me again what they did and why we're supporting them so badly? He was so nervous about it. And I wonder whether, turn to you, Jim, whether you think that demonization is going to make consensus even more difficult. No one wants to be accused of going back to the way
so that was absolutely true when I was sort of on the inside. That is in 2009, 2010, 2011 even, the imperative to embrace the narrative that Fannie and Freddie drove us off a cliff. And that not only that, but in order to get to a new system, you had to purge yourself of those institutions. You sort of had to start there to have a meaningful discussion with anybody in 2009, 2010. I think what's happened is the drift towards pragmatism has made most folks who were very bearish about keeping Fannie and Freddie around along in 2009, 2010, most have come around to the notion that you can create a much healthier system than we have today by giving Fannie and Freddie competition or unifying them into a central utility or something. You can handle the infrastructure of Fannie and Freddie as institutions in a way that can check their risk so that you no longer have to throw the baby out with the bathwater. And it feels like that's sort of the consensus of where we are now. Whereas 2009, 2010, the consensus was, they got to go. Like for us to even have a meaningful discussion about reform, you had to start with the principle that they had to go. We're not there anymore.
Well, it led to you having a bullet point in your reform rollout that actually embraced the notion that you could have the retirement of the GSEs, which is an entirely different reality that we've all been discussing. And I think one of the other reasons the Democrats may be more willing to come to the table, and there's still going to be the wind swirling around the field goal kicking, as you said, Nick, but is that, you know, they have a motivation to build a more durable system that'll withstand the political crosswinds that'll come when there's someone else that's appointed to be the, you know, the overseer and the, you know, the regulator of the GSEs.
Two of the key things to acknowledge, I think you hit the nail on the head earlier. Part of it helps too that you have some retirements happening. I mean, to be honest with you, I think, you know, Jeb Hensling represents where I grew up in Texas and where I'm referred to as the other Jeb. But I mean, it does liberate him somewhat, I think, because, you know, he had the PATH Act. It was, I think, a religious statement of sorts for what we conservatives believe, and we were starting with a blank sheet of paper, more or less. That's a little bit of an unfair characterization, but more or less. I think he's recognized that, and he's now publicly said, and made it a lot clearer what he was making clear, I think, for the last couple of years in private settings, that, you know, he doesn't want the perfect to be the enemy of the good, that his standard for just improving on the current system is relatively low. The other key point to make is that Jim touched on this, but it's not as if, we shouldn't think of GSE reform as a binary thing. The legislation gets a lot of attention in the press and other things, and we're making progress or we aren't making progress on passing GSE reform. A lot of reform has been happening since the conservatorships began in 2008. And both Ed DeMarco as acting director of FHFA and Mel Watt as director of FHFA has done a lot to reduce the risk and I think make less frightening the prospect of working out sort of the last mile or two of housing finance reform. I think when we were trying to do Johnson Craper or Corker Warner back in 2014, there was quite a bit of fear factor about where the capital is going to come from. You know, no one wants to throw a party and find out no one shows up. Right. And I think you've had a lot of demonstrations since that time that there are a lot of credit risk sharing transactions and a lot of pools of private capital globally that can come play a meaningful and sustained role in supporting the U.S. housing market going forward. And that puts, I think, reformers in a position to be able to actually answer that question with some credible now data points to say that we know where the private capital is going to come from. And I think you're going to see further experimentation along those lines in the coming months and years that's going to help bolster that confidence further.
Two things have made it easier, I think, which is following off what Jeb just said, easier than in 2009, 2010. One, we've largely given up on the whiteboard exercise. 2009, 2010, you know, we all sat around whiteboards and imagined like a wholly new housing finance system, and that scared the bejesus out of, understandably, stakeholders and others. We thought, well, I mean, maybe this thing's going to work, but who the hell knows? And so we're off of that now, and we're working more sort of within the framework we've sort of come to know over generations and modifying that framework rather than throwing it all together. That makes this a lot easier. Secondly, as Jeb said, we've learned a lot in the last 6 or 7 years about the appetite for credit risk, what kinds of institutions, what kinds of structures are out there to help create and manage a robust credit market that isn't Fannie and Freddie anymore. We're slowly learning what a securitization infrastructure and utility can look like, what's hard and what's easy about that. These are all things that we don't have to flesh out on a whiteboard as we did in Johnson Crapo. We get to see play out in reality. So that combination of pragmatism and a little intellectual humility in the face of what reform needs, and some empirical experience with what it is we're trying to develop towards, I think makes this a much heavier lift. The caveat, though, is while I think it's true that there's a lot coming together that may make reform more likely to happen next year than one might have expected, that's true in theory, but once you end up with bills on the table, you'll quickly see folks gravitate to 3 or 4 hot points, you know, that will, you know, where we'll learn whether or not, you know, progressives and conservatives, where the Venn diagram overlaps in certain respects. Progressives are going to need to have some assurance that pricing isn't going to go completely out of whack for folks that they care about at the edge of the credit box. Yet conservatives are not going to want to see too much of a command and control kind of environment over pricing in a system like this. Progressives are going to want to make sure that there is some commitment on the part of guarantors and other secondary market participants to serve all communities, so that you don't have credit deserts out there, where underserved communities that 30 years ago weren't getting served once again get left out in the cold. Yet conservatives aren't going to want to see guarantors forced to lend into markets that are economically irrational to lend into. So it's easy for us to say up here that the stars are going to align around reform. I think what the stars are going to align around is a conversation, and we'll know pretty quickly the odds of that conversation landing in a successful place or not. Right. Pretty quickly, given where the hot points are and what the initial positions are.
And whether they've given themselves room for trade-offs. Because, and I recognize we don't have time to go deeply into this, but FHA reform will be part of the conversation as well. It's clear that that's where the House has been, and it's clear now the Senate wants to join that conversation. And that's a conversation that needs to be held, to your point. And it'll be interesting to see how the administration weighs in with its principles ultimately, and what their points of emphasis are, on the heels of what the Secretary was mentioning today with respect to FHA. But that may also give room for certain trade-offs. You may leave the FHA or the Ginnie securitized piece until sometime later, if you can really have a conversation that's working out to form some consensus on the agencies or the successors to the agencies.
My experience is more limited in government than the three of you. But I always tend to vote side with inertia. Side with inertia overall. Mortgage bankers come up with their own proposal. There are other stakeholders who said, no, thank you. The status quo works for us. I know it may not be sustainable in the long term, but I'm worried about tomorrow and the sale and the transaction tomorrow. Why won't that undermine all this discussion?
No, look, the execution is still being done very efficiently, but that's an illusion for all the reasons that have been discussed here in terms of that being sustainable. You can't rely on a regulator, a single individual, to provide stability. And only Congress can, change the charters or charter what, successors to the agencies can do.
Bill, a conversation I had with a stakeholder group, which will go unnamed, that said to me, if any proposal I worked on increased the cost of mortgages by 1 basis point, we're against it. Well,
I can imagine who that stakeholder might be.
Any proposal that involves the substitution of some private capital for government capital is going to be at least 1 basis point higher.
Yeah, but there are benefits that'll be derived.
Well, they should be opposed to the status quo is what they should be opposed to, because that's exactly what they're going to get. Yeah. There will be capital retreat, there will be a crisis if we don't address the fundamental systemic risks that are still in the system.
And to build a more sustainable system, you're going to have to abide that over time before the benefits can be felt by borrowers and investors. And
Is that optimistic, Jim?
I put the odds at pretty good that we'll have a real conversation with real legislation in the next year that we haven't had before. So I think we'll have a much more dramatic run at this than we had during John Scrapo. I think we'll get closer than we got then. Whether or not that's close enough to get over the finish line,
best chance we've had since the conservatives began, I think. And reform is going to keep happening whether you get legislation or not.
So. Something's got to congeal in the first quarter, because the closer you get to June, the less likely anything's going to happen.
Okay, last question, very quickly. What's the over-under on when Freddie and Fannie escaped the conservatorship? What year?
Oh, geez, Louise.
Make notes, guys.
I say escape conservatorship, because I think even with legislative reform, it's a long track.
Transition.
6 years.
Yeah.
6 years. Bill?
I'll just say 7, so I can be on the high side of Parrott.
Oh, well, I should either do $1 or
exactly.
8. I'll be the optimist and say it'll be sooner than that. So I think 2 years.
2 years. Wow.
Look,
awesome.
If you gave me sodium pentothal, I'd probably give you a different response.
I want to be as optimistic as you all are. I just don't feel it's warranted. With that, please join me in thanking our panel.
I love that. You get a D. You're done.